What other type of repurpose can you do with a bowling alley other than something like storage? And that's where the instant value comes in, because we bought the building with land for almost less than $10 a square foot.
Really you have this margin of safety of that lower cost. So it's like at some point you can buffer a lot of expenses because the value of your entry, your basis going into it is so low.
So building new would always be the benchmark of what we could build per square foot. But if we can acquire the land, the building, construct, and then be all in for less than we can build new, you make your money when you buy.
Welcome everybody to Self-Storage Income, and today Connor and I have some special guests with us today. We got a couple of Louisiana boys that we met when we were down in New Orleans, and they were doing some pretty cool stuff. And so I asked them to come on here to talk to you guys about it. And they had a project that they converted a hospital and all sorts of stuff. So really fascinating deals they're doing.
Man, that's incredible. I'm excited to dive into it. I don't know a ton about either of our guests today. Ronald, Chris, great to meet you guys. Thanks so much for being here, joining us on the podcast today. Give us a rundown on who you guys are, what you guys do.
Yeah, absolutely. Thanks, AJ. Thanks, you guys, for inviting us on. As mentioned, met you guys down in New Orleans. Love what you guys do. Love what you do in the space for promoting education and just knowledge to everyone that is looking to learn a little bit about what self-storage can do. Background on me and Ronald, we've been knowing each other for a long time. Went to college together and just do a lot of real estate together. My background mainly came from, was in corporate America for many years. Hurricane Katrina in New Orleans. I'm from New Orleans, Louisiana. After Katrina, I bought a lot of flooded and gutted houses and put them back together. So that was my start in real estate, and partnered up with Ronald, who's got a very long history in self-storage. I'll let him explain, but we basically partnered up in 2015. And basically, we focus on self-storage conversions.
My background history, I guess our family started building mini storage. And my dad started a construction company and built mini storages in 1969.
Oh, gee.
Yeah.
Oh, gee.
I grew up in the business. Storage wars was definitely something that was very common for us to grow up around. Man, the stories that I've grown up is really neat that our parents taught us work ethic. We all love to go snow skiing at Christmas. Well, I have 6 brothers and sisters. I'm the second youngest out of 7. And growing up in New Iberia, Louisiana, there wasn't a big pool of people to bid on the units. So they would typically have, like 3 or 4 different families that would come bid on the units, and they would try to fix the rates on doing such. So back then, my dad would always have somebody in the back of the crowd trying to drive the rates up. And if that didn't work, he would just buy the units back himself because they would try to fix prices at $50 or below. So what we would do as kids was we'd load up all the units in trailers and bring them to a warehouse. We would sort them, and at every holiday, Easter, Thanksgiving, we would have big flea markets, big auctions, and the money that we would raise from that would be the money that we were able to use to go snow skiing with.
That's awesome. I mean, you're talking like when your dad started, that was before America even remotely knew what storage was. I mean, that is like pioneer of industry kind of stuff. For all of you listening to the podcast, that is like the origination. In fact, that's earlier than I think a lot of people would even peg when storage really even started and became a thing. That is like, one of the original handful of probably people in the United States getting into it. So that's really amazing. And what a history for you to grow up in it. Now talk to me about 2015 when you guys paired up. What was the decision there to go into storage? What drove that?
Well, Chris and I in college, when we met, I'll never forget, we were freshman year, we're talking about what his family did business-wise when we were pledging the same fraternity. And I was telling him what my father did. And he's like, man, my grandfather owns a storage facility in New Orleans. And I said, yeah, we have all these in New Iberia. I was like, maybe we might do storage together one day. And then I finished up pre-med, decided not to go to medical school, bought my father's construction company, and built my first mini storage whenever I was 24. Fast forward, we specialized in building pre-engineered crane buildings, offices, metal buildings for the oil field industry. So we built their facilities in South Louisiana. And when the BP spill hit, I went ahead and I knew that the Gulf of Mexico, Gulf of America now would not I would not have much business along the Gulf Coast for my construction company if I stayed focused in oil fields. So I went ahead and got my contractor's license across the U.S. and started following the oil field companies to develop their facilities in all the shale play states around the U.S. So I was part of that boom from 2009, 10, 11 on, going from North Dakota, Oklahoma, West Texas, Wyoming, West Virginia, building their facilities. And in 2015, when that started slowing down, I had done very well for myself and felt very blessed, but I knew that it was time to jump back in to the real estate market. And storage was my first choice. And that's when Chris was getting into the residential market, or was been in the residential market in real estate in New Orleans. And we teamed up together to start fulfilling what we talked about whenever we were 18 years old.
That's incredible.
Yeah, it was a good marriage because from as far as design build of anything metal building, I mean, Ronald's experience of construction is top notch, right? And coupled with my unique abilities from the real estate side, from more of the front end, mostly acquisition of how we acquire properties, what we look for, and going into markets and doing deep dives and basically uncovering buildings. And we just felt, whereas Ronald multiple times is I prefer to build new, but I also knew the value that you could get from conversions when you look at things from replacement cost, right? And some of our metrics are is if we can buy something at 30%, 30% of replacement cost, and then construct and be at about 50% of that replacement cost, we're getting instant value right then and there of versus building new, right? So building new would always be the benchmark of what we can build per square foot. But if we can acquire the land, the building, construct, and then be all in for less than we can build new, you make your money when you buy, right? And that's kind of how we approached it. So a lot of our models where we would search building first and then kind of back into a market versus, try to study a market first because there may be very limited conversion opportunities in a market, right? So it's a little bit of a different approach, how we implemented our strategies. But we've done everything from bowling alleys to, again, this latest one was a 6-story hospital conversion. We could touch more on that in a little bit. But, big box retail at the end of dead malls to old furniture stores to actually construction companies where we can find value in a certain roof height that we were able to buy, which is kind of a nugget that you really can capture additional square footage for less purchase price.
Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class when dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process. They are bar none the best. So if you are looking to automate your facility or operate it in a best in class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description. Now, walk us through that first deal.
Our first deal was a bowling alley. We converted a bowling alley into a climate control. We actually left the lanes and just filled in the gutters. So the hallway system really looked cool. It was a neat conversion. It's a pain to get all of the bowling alley equipment out of the building, but we were able to capture a lot of value in that one. That was our first one.
How much did that cost, like all in, and how much like the building?
Building was 420, I think. Construction was 600. So we were in it for like $1.2 million maybe. for a 33,000 square foot conversion. And it wasn't that big, so it definitely wasn't big enough. So we ended up buying a building in an industrial park right down the road that had a lot more square footage that we converted non-climate units to. And we had one commercial tenant there as well. The lease up wasn't bad. We did good on lease up. The rates weren't the best starting off. Hurricane Laura came in and did a lot of damage to Lake Charles, and we filled it up 100%, and we got rates right, and we were able to do a sale with a 1031 with that facility, and the construction company in New Orleans that we had bought the same was part of that sale. That was it had three buildings on the site. It had two tall metal buildings that had eave heights greater than 20 foot or right at 20 foot. So I was able to convert those into two-story interior build outs. And there was a three-story office building on that property as well that we were able to convert. It was a concrete structure that we were able to convert to 3 stories of storage as well. So we took both of those up and filled them up and did a 1031 exchange for those two properties.
Yeah, AJ, the instant value of finding buildings, say for instance a bowling alley, who's going to buy something like that?
Yeah.
Right. Can you turn that into apartments, or
Nope.
what other type of repurpose can you do with a bowling alley
Yep.
other than something like storage? And that's where the instant value comes in, because we bought the building with land for, almost less than $10 a square foot.
Yeah.
Try to build that new, right?
Yeah.
You just can. And the value we're able to create in the office building that we mentioned was basically it was a construction company. So they had metal warehouses with over 20-foot eave height that they used to store all their equipment. So just by coming in, be able to pour a mezzanine deck and create the second floor, was able to double the square footage and get instant value there. And we divested that portfolio. It was a three property portfolio that went full cycle. We divested in 2022 in June, which we all know what happened in 2022. In the later part of the summer, the interest rate started going up, and we were able to divest that portfolio at a very, very good cap rate right before all the movement. Plus, our insurance went up from $30,000 to $90,000 2 weeks before the sale. And we thought it was a very justified retrading. We expected it, never did. And we ended up moving on, and we ended up 1031 exchanging into 5 different conversion opportunities from there.
That's what it's all
so
about.
We're coming off of those, the hospital being one of them. One of them was old Burlington Coat Factory at the end of a dead mall. Another one was an old Rooms to Go furniture building in Texas.
So how many facilities do you have right now, and how much square footage do you have today?
I think between my family stuff back home and Chris and I think it's around 12 total locations.
And how many of those are conversions?
I would say out of those, every one that Chris and I have done together have been conversions. 7 of those, plus I've done several conversions here, so 9 of those would be conversions. And I still build new construction storage for customers locally. So I'm very experienced with new construction. I'd much rather do that because it's a lot easier to fix your pricing. It's not necessarily faster, because I say 9 out of 10 times I'm able to get open a lot faster with the conversion than I am with new construction.
Well, walk us through, you guys, the pros and cons then, from ground up to conversion. What are the pros and cons that you guys are looking at?
Well, you just hit on one. Ronald just hit on one of them. Is the soft cycle, right? Of from acquisition all the way to eventually getting a permit, having to go through all the engineering. Through that, a lot can change, right? In that time it takes when you underwrote the land and the bid on construction. By the time you get the permit, suppliers aren't giving you year-long bids, right? They say, here's your bid, is good for 3 weeks.
So we have 3 facilities in Corpus Christi. The first facility we got, it was called Buttercrust Bakery. Great bakery that was built in the 1930s. They moved in the 90s to San Antonio. So the bakery was vacant, 73,000 square foot building, brick block building, flat roof, and definitely wasn't in good shape. Roof had some issues. There had a lot of pigeons in it. I mean, there was a lot of work to do cleanup wise, but it was already gutted whenever we looked at it. So when we started digging into it, it was a conversion that was in the process of getting designed and permitted by somebody else, but they made some bad investments in some multifamily portfolios and had to liquidate. So it went to auction. when I started digging into it, I was able to find out who the previous owner was that was going to convert it into mini storage. Reached out to him through some vendors that I'm close with that we've been dealing with for over 30 plus years. Got the guy's cell phone number, reached out to him, was able to buy his set of permitted plans the week before that we bought and closed on the building. So I went straight into construction with a permit a week after purchase, and we were open in 6 months. And that would have been a 4 to 6 month design phase and at least 6 to 8 months of construction if the demo wouldn't have been done, if not longer. So we saved about 8 to 10 months, in my opinion, on that project by doing what we did. If it would have been new construction, it would have been roughly 9 months to a year project, that size of a facility. It takes up a whole city block. So between that and design, you were looking at 18 months roughly, and we got it done in 6.
Well, you guys kind of touched on some of the pros. Obviously, that timeline is a huge one. What are some big pitfalls people need to be looking out for on conversions? I feel like there's so many unknowns when you're going into an old building.
One thing I would say we've been fortunate on looking into it just because we have the experience and the knowledge, but that even with that hospital, it was built a long time ago. So that doesn't mean that their stairwells were designed to current code. That was the first thing I checked on in the building because if that would not have been to current code, not the right depth or height of the treads and whatnot, we could have had a major cost because it was all concrete construction to go 6 stories on 3 different stairwells for that building.
Mhm.
But the hospital conversion, we knew we had to replace all sprinkler systems, all electrical, all mechanical. We really just had the bones of the concrete building itself that was good. Everything else had to be replaced. So that was a little bit easier. Some of the other ones that have interior build out and you're having to relocate electrical panels from areas of buildings to consolidate all into one area so that you could not have a cluster of different wiring in different locations of electrical rooms and running back with all your sensors. There's a lot of little odds and ends. Asbestos is a huge one. The hospital was already gutted when we purchased it. If it would not have been gutted, I would not have bought it.
Yeah.
Mm.
Because of the age of it, asbestos would have been a huge remediation cost that the project would not have been able to afford.
So how do you avoid those pitfalls when you're underwriting a deal? There's this huge delta in between the known and unknown cost. How do you limit that down and how do you limit that risk? What are your guys' process or thinking that if I'm looking at a conversion, how do we make sure that we don't get in over our heads?
The ADA compliance side of it, sprinkler systems, if they're outdated and have a lot of rust on the inside of them, asbestos, those items are big. But then the structure itself, when it comes to steel buildings and structures, renovation projects, we've done so many. Really know what we're looking at when we walk into a stick frame building, if we walk into a tilt wall constructed building with steel framing, with mezzanine decks, or with a pre-engineered metal building or a block building. We've done so many of all of them that I guess just the level of knowledge that we've gained from making mistakes in the past that you never make a second time. That's the best way to put it. And also having a team of subcontractors and superintendents that are very knowledgeable and all work for the common goal of the investment. We're not trying to drive the construction cost up of the project because a lot of these projects, I have ownership in the project as well as in the construction company. So we're all working together as a team to keep the cost down so that the construction company can keep making money, but for the investment to be successful, is so we can continue to do more of them.
Ronald hit a unique point of the zoning, right? Because you're changing the use of the building, there's no get around not bringing it up to current codes, right? So if you're saying that what's the pitfall when you're looking at a building, those are the things that don't jump out to you until you actually go put in your permit. A lot of times you don't put in your permit until after you've made the purchase decision, right? So you have to know those things up front. What are the current codes? And if you're doing a conversion, usually that building was built a long time ago and is not up to current code.
Mm-hmm.
You have to know what those are and actually project those costs ahead of time. And a lot of times, like Ronald said, a lot of times he's, through his experience with these buildings, he's almost a lot of time educating the engineers. I could remember one instance where we were talking about floor load, right? And floor load, you have to have a certain load on a floor for weight wise to get around the permit. You would probably explain this better than me, but he's intuitive enough to know, well, we have hallways, right? We have stairwells, right? You can't take a blanket load on the full floor. You just have to take it for the units itself, right? So that really is a big factor in the load calculations.
And working with engineers to make sure that they all agree with the calculations that we're running, so that's all. Of course, that has to be stamped no matter what. Like, for instance, when we were buying a building in Waco, it was a printing company. The building was sectioned off. It was added on 4 different times. So it's over that building. I think it was around 69 or 71,000 square foot of block building. But it was 4 different structures, all had 3-hour block firewalls separating them in roughly 20,000 foot sections or a little bit smaller. So per code, just like in a downtown city area, you can go with certain square footages up to 24,000 square foot with a fire barrier at 12,000 square feet between the 2 storage buildings. But if you're up against any other buildings greater than that 24,000 feet, then you would have to have a 3-hour firewall so that the building, that wall could, if one side of it caught fire, the other side could break away from it and not fall with it and take it down. And it took me working with the head of the state fire marshal's office in Louisiana that was in agreement with me on this code to work with the head of the permit office in Waco, Texas, and fire marshal to explain to them why the building design was adequate to not have to put sprinklers in it and to utilize the firewalls that were in place.
Which is a huge cost savings, right?
Huge cost savings, and it took some back and forth for probably about a month and a half, but I was finally able to get across that hurdle. If not, no, that was a risk that we were willing to take, and if we would have had to put sprinklers in it, we had already bought the building and we would have done it.
Yeah.
But we were able to get around that one.
Really you have this margin of safety of that lower cost. So it's like at some point you can buffer a lot of expenses because the value of your entry, your basis going into it,
Correct.
right, is so low. Because, for a lot of people listening to the podcast, essentially what we're talking about here is commercial real estate derives value from the income it produces. Well, when you have a use of a bowling alley that no longer functions and can't be used for that, all of a sudden other people trying to buy it, they're like, we have no use for that. We can't figure out how to use it. So now it's like this isn't even an income generating asset. We don't even know how to make it an income generating asset. So its value is way below even, like they were mentioning, replacement cost or anything else like that, because there's no income and there can't be income derived from it. Well, what they're doing is they're going in, they remove everything, they put storage in, and and then that square footage is being utilized, creating revenue and income. And that income, right, is then all of a sudden a lot, and in lots of cases, even more than the bowling alley's net income was. So the spread between non-productive cash flowing square footage to really good productive square foot cash flowing, that is a huge value spread right there. So you're buying it at something that is far below. I think a lot of Benjamin Graham and his cigar butts, and how he was buying things and companies that essentially you could scrap, and the scrap was worth more than what they were buying it for. So it made sense. So that is the case here. Now, that is very contingent though on buying it at the right cost, meaning that that doesn't mean because it's a conversion that happens at all, right? So they know the value they're looking for. They can underwrite it, they know it. But a lot of times I see people, they buy conversions and it actually costs them more than if they would have just built it or its previous use. It wasn't discounted enough. And you also got to understand that market. And that's what they've done good on a few of these. I can imagine the hospital wasn't quite like that. The hospital was probably a little different. It was not probably the cheapest thing ever.
We bought it at $9 a square foot.
Jeez.
That's wild.
So it was.
150,000 square feet at $9 a square foot.
And where was that located?
Houston, Pasadena, Texas. Really, when you draw a circle around Houston proper, it's in it. I mean, it's carved out and called Pasadena.
That's so cool.
The population is strong. The building is, I mean, the building is concrete structure, most well-built building that we own by far. It's like a bomb shelter. And when we came in, we spray foamed all the perimeter walls. So the temperature that it holds, it's just unbelievable. We almost have to force the air conditioning units to run because it holds the temperature so well.
Yeah, that's amazing.
That is amazing.
You can drive straight. The way that it's designed, you drive straight through where the front entrance was. You drive straight through the building with your vehicle or U-Haul, stop at the glass doors, at the elevator to load and offload. Very, very convenient concept. It really turned out to be a beautiful building.
And when you guys are looking at these, I want to touch on a couple things. You'd mentioned being able to go in and maximize square footage by finding a certain ceiling or roof height. I wanted to just figure out what other things are you guys looking at when you're going in and looking at opportunities to maximize square footage. So I want to touch on that, but then I also want to jump into how you guys are finding these conversion projects too. So what are you guys looking for first and foremost when you go in to see those opportunities to maximize square footage, value, cost savings, those things?
It's maximizing rentable square footage. If we have 18 to 20 foot clear height inside of a building and we drill the foundation and see that it is strong enough to handle a second floor interior build out, then we're all about it to double up the square footage. Of course, you need to look at how much square footage are you really going to create by doing so that you can justify the cost of a personnel freight elevator to handle that. I'm always looking at that. If that opportunity arises and you can get a tall enough building to build out the inside of, we definitely entertain that every time. Now, when it comes to the net rentable versus gross square footage of the space, the ultimate goal every time, especially with single story, is to have an 80-20 split. You want 80% rentable, 20% your hallways and your office. Whenever you get into multi-story, you lose elevator square footage, you lose stairwell square footage, and a lot of times we end up at a 70-30 or a 68-32 split roughly. But we've been fortunate not to really get hit hard with 60-40 splits on that. So, the dimensions are nominal in a way. So if you have 109-foot long run of storage units and you have a divider wall every 10 feet between each unit, and you want to get that extra unit in there, but you're going to have a 10x9 instead of a 10x10. The dimensions are nominal. If you shift every single one of those partition walls over a half an inch or a little bit more, you end up getting your 10x10 units because the dimensions are nominal when it comes to that. So even if the unit is 9 foot 11 inches by 10 foot, nobody's beating you up on rates for that. So there are ways to maximize square footage, get the right amount of units by condensing some of that. If going inside of an existing building, the dimensions aren't exact, you can still make that work with a little bit of thought and a good superintendent working with you to maximize that for you.
I don't think Ronald gives himself enough credit on that because he lays out the storage units in the building, right? And then gives it to the architect and designs it, right? Because he's looking at it from the aspect of I'm maximizing my net rentable square footage and no one's going to lay out this better than me because I'm also know how I'm going to construct it while I'm designing it. Right. So that's the true benefit there, because you're right. You're trying to maximize the most net rentable square foot you have and not have any dead spaces in your building. And then also know how you can convert a lot of the units as well, because you're making a lot of speculation on what the unit mix demand is, especially if it's your first facility in a market. Right. So you sometimes you need the ability to change some of the unit sizes as well. And another way we do that sometimes is by phasing. Right. And storage has a unique ability to be able to phase construction. For that, one of those reasons alone is we need to understand what the market dynamic is on what the demand is for certain unit sizes. And by phasing, that's a benefit of phasing, along with a lot of other benefits of phasing as well.
And a lot of time when you're dealing with a 100,000 square foot building or bigger, even a little less, it's if you don't have a set of plans when you purchase it, you're having to recreate everything. And some of your dimensions, if the buildings are not square or wall thicknesses vary on the same wall for some unknown reason, that happens. You can bust your dimensions one way or the other. And if I'm not on site, my superintendents do a phenomenal job, Chris, Mike, both. when it comes to laying those out to help me maximize. I'm not going to take all the credit because they help me maximize the rentable square footages on site whenever I'm not in that town at the time. And they come back to me. They're always thinking ahead, trying to gain an extra unit here or there and making the numbers work to where we get more units. And typically when we finish projects that size, we don't lose square footage from what we estimated. We always end up with a little bit more rentable square footage than we had on those plans. Then we do a final as-built drawing to accommodate for that. And so not every time are we trying to go with, try to get, say that, for example, that 10 by 10, if it's not 9.5, if we could get an extra 10 by 11 or 10 by 12 and make some of these units bigger just because we got a little bit more space, we're going to do that as well. So it's a team effort, but history has definitely proven that that's what we've been able to accomplish with these conversions.
Yeah, and those are all phenomenal insights and such a testament that you really have got to have people on your team that know and understand that a half an inch in a unit, multiplied over, 100 units, that means a lot. It's not just hey, we'll do 10 by 10s and this and that. When you understand that you're trying to maximize the rentable square footage, you have the people on your team that also understand that, and the people that can make it happen, know how to make it happen. It's an absolute, especially when you're coming into these conversions. Like you guys said, there's so much just unknown when you're coming into these. If you're not working with those experts, good luck. It's not going to be fun. So it's a huge testament to that for sure. Thanks for sharing. So then on top of that, how are you guys finding these things?
Yeah. How do you find the conversions? Like, what are you looking through? Where are you going?
Hats off to Chris on this one.
Yeah, that's typically my role within our partnership, right? Spending the time trying to find these needle in a haystack, right? Because essentially what it is, right? Finding the building that is the right building for conversion is a needle in a haystack. And I have to say, I mean, it's no secret method of how you do this other than be known in the area that you're looking for storage conversions, right? Most of the deals that we get come from people that know what we're looking for.
Yes.
That is the number one way to find. If there's certain markets you like, go to the retail brokers, right? Not the storage brokers. I don't go to the storage brokers when I'm looking for deals. I'm going to the other, asset class brokers to tell them what I'm looking for as far as a shell, right? I mean, single tenant retail are the best ones. Those make for the best conversions, the old Kmart's, the old Sears buildings, because they're typically already sprinkled. They're well built, and it's hard to find different uses for them. So that by far, AJ, is the number one, right? Is people knowing what you do and know what you look for, and they know the right building to bring to you.
Well, and you can find buildings, but the feasibility that Chris hadn't mentioned yet, I mean, the amount of a deep dive that Chris takes into these markets, instead of hiring feasibility analysis to companies to come in and do feasibility for us, Chris does that. When it comes to me on the storage side and the unit mixes and all that, yep, that's what I do. Well, Chris is equally as important and as good at what he does on the feasibility analysis side of it, and also on the negotiations to get the deals to the closing table. He's a workhorse when it comes to all of that.
You really have to understand, okay, this may be a conversion, and that building actually may be perfect for a conversion, but the market may not be. Mm-hmm. And that's why it's a needle in a haystack, because it's not just the opportunity as in a cost perspective and what's the basis and is it allowed and can we get it to be qualified for it. It's also, is this market even good? Could this market hold that much storage? Or is this an overbuilt market? So those two worlds have to come together. And that adds a much higher layer of complexity onto the projects in order to make it successful.
Yeah, we could have done a whole lot more deals if we weren't as selective as we are.
But now is the time where we're so grateful and thankful to God for being that selective and being strategic on it. When you get a soft market with the housing market, people not moving, rental rates going down, everything getting more competitive, interest rates going up. We're very blessed to have been really thinking about that and attentive to that whenever we took on these deals.
Mm-hmm. Absolutely.
Yeah, no, I wanted to also touch on, you talked about kind of looking for the asset and then backing into the market. Can you walk us through what that process looks like for you? Because I know a lot of people, like you said, they'll go and look at markets first.
Yeah, I mean, you guys may know this more, but we don't do a lot of deals on the West Coast. But try finding a good conversion on the West Coast is a lot harder because there's not a stock of older buildings that need to be repurposed, right? Then as you move more south or southeast, where it's an older town that's, built in the early 1900s to the late 1800s, right? So knowing your markets where there's a good stock of buildings, but I mean, you're still looking for all the things that other asset classes would look for, right? Now, look, if I wanted to go in an industrial park, I would find tons of buildings that meet great conversions. But does that mean that's a good site for your storage facility? No, because I mean, the same fundamentals hold true, right? You want to be on major thoroughfares. You want people to see you. I mean, we all know that most people still rent from the facility they drive by every day, right? Some of those old fundamentals are not going to change. You could do some of the best marketing online, but at the end of the day, your visibility still makes the most sense, right? And that's why we love the single tenant retail buildings, because they're a retail location, right? They've already went through that process of building in an area that has the most density and the most rooftops. Because essentially, AJ, that's what we're looking for. We're looking for rooftops, right? We're looking for rooftops around a building. We're looking for density around the building. We're just like anything, we're kind of shifting more towards a more drive time than we do a traditional radius, right? You put a radius around your building is half your radius around, an ocean or a gulf or, a mountain range or whatever it may be, right? Most people still want to stay less than 20 minutes from their facility.
A river, a bridge and a river makes a big difference.
Of where they would go over and go store at your facility.
So true.
So if I really like a market and want to buy in that market, I'm doing the old school things. I'm going to the market. I'm driving around. I'm looking for vacant buildings.
Yeah.
Right. Vacant buildings. I'm going to get the best deals on a vacant building.
So are you seeing this as a good environment to be executing on conversions, or is it harder to find good opportunities today? Or has it gotten easier?
I think it's absolutely harder, especially in storage right now, right? Because who has a crystal ball, right? For the past 10, 15 years, it's been Goldilocks. It's been the Goldilocks asset class.
Yep.
So now things started getting difficult where me and Ronald, we would have never acquired an existing facility 2-3 years ago. Never. There was no value in our opinion there.
Yeah.
Because we were buying at sub 6 cap rates. We don't see value in that. Look, because again, we're developers, right? Where some other are more operators, right? So they create their value through operations, right? We put all of our buildings on third-party management. We have a great partner in our third-party manager that we rely heavily on a lot of that feasibility. So everybody has their unique way of how they look at things. Today, would we consider new construction? I don't think so.
And with the tariffs taking off right now too, I mean, steel prices are going to continue to go up.
It's going to be my next question.
Yeah.
We're not seeing the interest rates moving right now yet either. So there's a lot of stuff to look at. I think streamlining your operations and getting everything ready and being prepared to go is what we are doing right now. That's what we're focusing on, so that we hit the ground running when we start seeing some opportunities come up.
But see, we have to then go, okay, are we now willing to start looking at acquisitions, right? Because maybe things weren't priced what they were 3 years ago, but that's a whole set of different underwriting criteria than what we're typically used to. So we have to adjust, right? And kind of figure out what is our game plan. But what I can tell you is we will always do conversions, right? But again, if you just do conversions, you're limited to, because we're so selective, you're limited to the amount of buildings you can find. If you wanted to scale quicker and you wanted to grow, which a lot of operators and sponsors want to do, you have to almost acquire existing facilities or build new.
We're not opposed to either one. We'll definitely do more. Now that we're getting our head back above water with all the ones that we developed. I mean, a gross square footage of what we developed the last couple of years just for ourselves was right at 500,000 square feet. So that's still with me having my construction company and all of our other customers and everything else that we do for all the other services that we offer. But I'm excited, and I'm getting to where I'm about ready to start rolling with a whole nother set. So.
Awesome.
Love it.
Well, you guys, this is an amazing topic, especially for right now in today's environment, because I know people are looking for opportunities. but where can people find out more about you guys? Where can they reach out directly to you guys? We've almost been an hour here, and I know people are going to have a lot more questions. Obviously, we can't dive in. Is there somewhere where we can send or point people to?
Yeah, we have a website. It's our storage name is Safe Space Storage, and our umbrella company brand is Safe Space Companies. So it's safespacecompaniesplural.com. That's our website. If anyone wants to reach out to us there, they can fill out a form, and happy to chat with anyone regarding anything that they need to know.
Perfect.
Awesome. We will put that in the show notes. You guys, it was wonderful to meet you in Louisiana. These projects you're doing are awesome. I love the way you're thinking about it and looking at markets. We really appreciate you guys coming on and sharing, your wisdom, what you guys have learned, and your expertise. It's extraordinarily helpful to our listeners.
Absolutely. Happy to do it, AJ, and appreciate what you guys do for bringing education to this space, which obviously we love.
Thank you, AJ. I appreciate y'all time as well, and for putting this together. And when we have some more time to visit another time, I'll be able to tell you a bunch of stories of all the random stuff we found in the storage units as kids.
Oh, that sounds great.
Nice.
Yeah, we'll talk storage and elk hunting, whatever.
That's right.
Yeah, definitely both. Definitely both.
All right. Thanks, guys.
Thanks, guys.
Thank you. Appreciate it. Bye.